I'm Charlotte McLeod with investingnews.com, and here today with me is Randy Smallwood, President and CEO of Wheaton Precious Metals. Thank you so much for being here.
Charlotte, always a pleasure. Thank you. Good to see you too.
Really good to be catching up with you. And I think as usual, we are going to start with gold, which the price, of course, has kept moving quite a bit since the last time we talked just a few months ago. I know that you are not really a price prediction kind of person, but I wondered if you could help situate us in terms of where we are in the cycle for gold right now.
Well, we still feel there's a good leg up in gold. We still think there's a lot of space up, which is when you sit in there looking at record prices right now, you really, question that. You would think you're near a high, but the movement, the momentum, the factors that are feeding into gold are still stronger, as strong, if not stronger than they've been. And I really do think that what we're seeing now, and it's supported by a number of different factors, but we're finally starting to see Western society, Europe and North America, starting to step into gold in a much larger way. This push in gold prices really started in sort of the Middle East and the Far East, China and other countries. It took a while for the West to wake up, but with ETF holdings climbing on a substantive basis, which is typically a Western way of investing into gold, with equities performing slightly better, especially the mining side, the higher risk stuff starting to get some notice from the sector. I know in our own marketing at Wheaton, we're seeing a lot more generalist investors coming in to meet with us. We're meeting a lot of new faces. About a third of the people we're meeting with are new funds that are looking at gold. And so all of that is starting to show continued momentum. And as I always say, you can't really talk about gold without talking about the US dollar, because that's what we measure it in. And the biggest challenge is to try and find any type of strength in the US dollar, anything that's long-term sustainable. As I like to say, gold is a comfort metal, and people seek comfort in times of stress, and there's a lot of stress around the world right now. So I see gold as being playing an ever larger role in society right now. We're pretty excited about the future.
I think that's a nice way to describe gold, and definitely a lot of different paths for us to go down there. I wondered if you could talk a little bit more about some of the conversations that you're having about the company. It sounds like you've been on the move a little bit, having conversations, and I'm curious about the type of questions that you're getting and maybe a little bit more about the types of people that you're talking to.
Well, at Wheaton, we created the streaming model now 21 years ago. And streaming is such a lower risk way of investing into the gold mining space, the gold production space. We really dramatically dropped. One of the largest, if not the largest risk in investing into mining companies is the promise of delivery on costs in terms of operating costs and capital costs, and how those projects get built and how they get operated. And one of the biggest challenges that most mining companies have is that when the price of a commodity goes up, the price of gold goes up, the cost will eventually chase it as lower grade material becomes more economic. So the cost of actually producing that gold will also climb too. Whereas in a streaming company, you don't have that exposure. Costs are defined by the contracts on a go-forward basis. We're very selective about which mines that we invest into. And so the bulk of our production is high quality, high margin operations where we get a share of these profits, but so do our operating partners get a healthy share. And so that combination makes us very attractive whenever you have new generalists coming into the space, trying to get comfortable with what gold can deliver, but not wanting to get caught on the backside in terms of some higher leveraged plays, some cost surprises and such. And yet, we still deliver all the exploration success, expansion capacity, leveraged exposure. It all adds up to a much lower risk way to invest into what's a pretty exciting commodity right now and a pretty exciting industry. And so there's been a healthy appetite out there. And it's really the fact that streaming is such an attractive way, especially I always say we should be the foundational part of your gold investment. And there's definitely some higher leveraged, higher risk opportunities out there that you can step into it, but Wheaton should be the foundation. We're never going to make you look bad.
Really good to hear about that interest. And I wanted to go back talk about some of the reasons that gold is looking so attractive right now. So one of the points that you often mention to us is the central bank buying. You had spoken earlier in this conversation about the US dollar and issues surrounding that, but there's a lot of factors going on that are driving gold. So what would you pull out as the most important?
Well, there's no doubt geopolitical stress around the world. We're talking here after what's been a pretty chaotic just last week in terms of what we've seen going on around the world. Countries sending bombers to drop. I just that geopolitical stress is sort of a good foundation, and I just I kind of half wonder the costs and the challenges behind supporting those kind of initiatives again spell to the negative in terms of support for fiat currencies. And so I'm incredibly bullish about the role that gold is going to play again, as it has for thousands of years, as the one constant measure and store of value that we have that isn't subject to political influence. That's the biggest challenge, is that any reserve currency should be apolitical. It shouldn't have that exposure to political influence. And what we have seen is that the reserve currencies of the world are subject to political influence, and we've seen them pretty heavily influenced of late. And that has got just about every central banker, every sovereign wealth fund, anyone should really be questioning what kind of exposure do you want to something that's got that political influence. And that's where gold shines. Gold shines because it is not subject to political influence. It is widely sourced, recognized, and equally appreciated in every culture around the world. And I just think that it's stepping up into that role to just try and avoid all the political machinations that we're seeing around the world currently. This is a great way to avoid that. And that's not lightening up. If anything, it's getting even a little bit more chaotic out there, which I hate to say it bodes well for gold.
I do have the sense that there is more awareness of these problems and the debt in the U.S. as well, with the big, beautiful bill trying to make progress there. Anything further you would add on that note?
Well, as a precious metals focused company, we love the big, beautiful bill. I mean, it just sort of highlights the challenges. And, I think the thing that probably astounded me the most out of that was how long it took Mr. Musk to realize what was happening and how government works. And, his comments were very, very, I think, bang on in terms of, the ultimate bankruptcy of this so-called reserve currency and the banking system there. It's a challenge. And again, just highlights why we need gold in this world.
Absolutely. And if we take a look over at the gold miners, I think last time we talked, you had said with the gold price so high, now it's time for the gold mining companies to deliver. So by and large, are you seeing them do that at this point?
Yeah, we have. We're seeing a lot of investment into the space too. On the corporate side, Wheaton is, I don't know if we've ever been so busy with so many different projects, and generally it's gold streams on gold mines. We're seeing a healthy appetite for capital out there. But we have seen that the returns on a number of our peers in the precious metal space have definitely strengthened up. We of course have been setting record levels of cash flows and production and revenues all through our company, and with the growth profile that we have over the next 5-6 years, we're going to continue doing that on a regular basis. And that doesn't even require a higher commodity price, which I think most of us are expecting. And so yeah, we definitely are seeing those improvements, and I would say that it looks like the market is actually capturing some of that benefit now. So pretty happy with the way that's going.
When it comes to the miners, I also wanted to get your perspective on the tariff impact. So this is another thing that's been playing out since our last conversation, the tariffs. And I know that much of it is not set in stone right now, but what are you seeing there?
Well, there's so many different impacts depending on perspective, depending on where you are. First off, as a streaming company, it doesn't directly impact us at all. But it could have an impact in terms of some of the economics of some of the operations around the world. Fortunately, at Wheaton, we focus on high margin assets, so there's plenty of capacity to manage that impact in terms of that. There's no doubt tariffs. The net effect of tariffs is that the cost will go up because it reduces your ability to freely select, what might be the best most affordable option when it comes to acquiring or purchasing, and that comes from capital costs, it comes from operating consumables. However, if you get that extra support from the backside of tariffs, which is to try and stimulate internal project growth so that countries can stand more on their own 2 feet versus relying on international trade, that's supportive. A country like Canada, a country like the United States, I don't think I've ever seen so much political support for responsible resource development as I've seen in the last couple of years, last year, really. And, nice and refreshing here in Canada to see, governments wanting to provide additional support. So far, it's been rhetoric. I'm still waiting to see hard and concrete advances in permitting and really that's all I think we need is to try and simplify the permitting process. We don't need the additional financial support. I just, there's a positive, depending on your jurisdiction, but there's also a negative. It is going to drive up costs. There's no doubt when you reduce that selectivity about where you can go to find, the most reasonably priced, option by adding in tariffs, it does have an impact on costs. And so there's, it really depends on where your project is, which country you're trying to operate in, where you're sourcing your materials from. Some of this can be positive, but most of it I think is going to wind up being slightly negative with respect to costs and will just contribute to the inflationary pressures that we have seen continuously in this industry.
Thank you for going into that. I know it's a really complex one. And again, another issue that Wheaton is shielded from. So still good to get your perspective, I think. Yes. I want to also take a look at silver with you. There's been some excitement about the silver price in the last couple of weeks. It's been on the move. And I think people are cautiously excited, but they know that silver is a volatile metal and it has that reputation. So what is your take in this move that we're seeing in silver?
Well, I've long been an advocate of silver, and in fact, it was a core focus of our company for the first, essentially 9-10 years of our existence as a streaming company. And I'm still, quite excited about silver, mainly because we don't see a lot of ways to invest into silver. There's not a lot of new projects in the silver space that are coming on stream. There has been a supply deficit for quite a while. It's been chewing up a lot of the inventory that's been built up around the world. Increasing industrial demand. It is the cleanest, greenest metal out there. It conducts electricity better than any other metal, lower resistivity. So the more silver we use, the better life is, period. High efficiency electronics, mobile electronics, antibacterial applications, water purification systems. Silver just makes life better, period. And so this whole push towards critical minerals, this, in my eyes, silver is the critical mineral. Now it's widely available, and that's probably why it's not the focus. It's widely distributed around the world. Mexico, Peru, two of the biggest producers, but it's produced in a lot of other countries around the world. And so, we have seen reducing production. We hit kind of peak production back in 2017-18, and it's been dropping on an annual basis pretty well ever since. And yet we have increasing industrial demand and all the high efficiency electronics and antibacterial applications, climbing every year, solar panels, et cetera, et cetera. And so, that combination just, really I think it sets up a great framework for a real strong bullish run in silver. As a precious metal, we haven't seen that. We've lost, it's really a retail investor metal. It doesn't play into role with central banks, and sovereign wealth funds generally don't use silver as an affordable precious metal, but the retail space does. And we have started to see a little bit of a pickup in interest. It's not unexpected. Silver usually lags gold. Every time I've ever seen gold do a major move in commodity price, silver usually follows a bit later, but then it outperforms. And so I think we're set up quite nicely for silver. We at Wheaton, of course, close to 40% of our revenue does come from silver. So we still have a healthy silver component to our precious metals spread. We're not seeing a lot of silver opportunities, which again is another positive factor for the price of silver. There's not a lot of new production coming on stream just because most silver comes as a byproduct from lead, zinc, and copper mines, more than half of silver. And we're just not seeing the investment into the base metal space that we need to sustain that production and grow that production. So yeah, we're really excited. As excited as I am about gold, I think silver's got a few more fundamentals behind it that make it pretty exciting time to be watching silver. And I think we may be just starting this. Silver's got some catching up to do with respect to what gold's done over the last few years.
Definitely. I think many people would agree with that statement. And I want to take a look at platinum as well, kind of a similar situation to silver where we've seen the price moving. It's another one that has that pretty big deficit behind it. Any thoughts on the move in platinum that we've seen and the outlook there? Is that another one that you feel optimistic about?
Yeah, I do. We've got some pretty exciting investments into the space. Plat Reef is coming on stream with Ivanhoe by the end of this year. We're going to start seeing some platinum coming from that operation. And so, I think the electrification of vehicles is, I think, long-term coming, but there's going to be a degree of hybrid approach, mixed approach. And generally that points to increasing consumption on a per unit basis. And so, And we have seen some shortfalls. There are some mines that have cut back on production, and so we're not seeing as much platinum come into the space. So I think the combination has given us a little bit of excitement to the platinum markets right now. How long that lasts? To me, I think platinum has still got a good 10, 15 years in front of it before you're really going to start seeing some challenges. Platinum does have some other uses. It's not just purely the catalyst market. There is a jewelry aspect to it. There's a high efficiency electronic aspect to it. And I'm more excited about platinum than I am palladium, but both of them, I think, will have at least 10 or 15 good years in front of them.
That's encouraging to hear. You hear about the vehicle usage and not so much about the others in terms of platinum. So good to go over that. And of course, I want to take some time to go over what is happening with Wheaton right now. So we didn't get a chance to talk right when the Q1 results came out for the company. So I wondered if there are any highlights you would pull out from there looking back or points that you would mention in terms of what we should watch moving forward into the rest of the year.
Well, we had a good Q1. We had good production from Smallwood, our flagship asset. We had a little bit lesser production out of Antamina than what we expected, but it was offset by some decent production from a few of our other assets, both San Dimas and with First Majestic and Penasquito did okay and from Newmont. So altogether though, Smallwood continued to outperform and it was a good start on track. Considering this is a year when we have 4 new mines coming on, we do expect a heavier bias towards production towards the tail end of the year. And so to have this as our first quarter, we're on track to finish in the upper end of our guidance. And so it was a good start to the year. Again, we've got a good, strong growth program with 9 new mines coming on over the next 5 years. 4 of them are starting up this year itself. And then the other 5 over the next 3-4 years. And so, having that kind of a growth profile going forward, I just think we're going to have a number of quarters like this where every quarter is going to be slightly better than the one beforehand. And so, the company is set up in very good shape. When you consider how high our operating margins are, what kind of cash flows that we're generating, the biggest challenge we have is looking for good quality projects to continue putting that cash flow back to work in the ground by acquiring ounces yet to be produced from our partners. We are seeing a lot of activity. The gold space, there's a lot of different gold projects out there looking for capital to bring into production. We haven't seen as much as I'd like to see in the copper space or the lead zinc space, but I think really what we're going to need, especially in the copper space, is a bit of a bump. Actually, in both cases, a bit of a bump in commodity prices to justify those projects going into that construction stage. And so, I'm waiting for that, but at the same time, incredibly busy in the gold space, looking at doing gold streams and perhaps a bit of silver, but generally gold streams on gold mines. And so I'm confident that we're going to be able to add at least a couple more acquisitions this year to continue adding to that growth profile and well on our way to 1 million ounces of gold equivalent production per year, which really excited about taking our company to a place that no streaming or royalty company has ever been. And so very exciting. This next 5 to 7 years is going to be continual growth. And I think just the way it's spread out, that I would expect to see this on a quarterly basis, continued stronger and stronger performance.
Very exciting. And I wonder if there's anything further you would add on the selection process. It sounds like you're pretty well stacked for the near term here moving forward in terms of assets in the pipeline. But just things that you are seeing right now when you are going out looking for assets and companies that you want to work with.
Well, it really comes down to asset quality, and we measure the first parameter that we look at whenever we're judging assets is where does it fall in the respective cost curve. So if we're looking at a gold stream from a gold mine, we want to see where that gold mine, from the operator's perspective, not from our perspective, but from the operator's perspective, where does this asset sit with respect to the worldwide gold cost curve? Now, I will say the gold cost curve is one of the most unique cost curves I've ever seen, because the spot price is so substantially higher than even the fourth quartile producers. If you're not making money in the gold space right now, something is seriously wrong with your company. And these high margin assets, you should be doing very, very well. And we're seeing that. We have seen great results out of a lot of our fellow gold mining industry companies, at least. And so, it's a bit of a unique space, but our focus has always been in that bottom half of the respective cost curve. Those are the assets that get reinvested into first. They're the ones that survive. They survive increases in royalties, taxation, challenges and tariffs, et cetera, and stuff like that, because they still have such high operating margins for our partners. They still deliver. And so that's usually the number one criteria for us. We're interested in good long life assets. The gold industry typically isn't as capital intensive as the base metal space. And so, one of the advantages that we do supply is when you invest into Wheaton, we do get quite a bit, like the bulk of our precious metals production comes as a non-core byproduct from copper mines. Just over 60% of our production comes from copper mines. And so, that usually comes with a much longer reserve life, which is something that's also important to us. We want to see that longer reserve resource, and good exploration potential on these mines. And so we've had a really good track record on that. We find that having a nice, smaller portfolio of productive assets that will be a part of our future is a much better approach than what I would call the scattergun approach that some of our peers have in terms of boasting about the number of investments around the world. But I like the fact that I can name off every single asset in our portfolio and know that it's going to play a role in delivering value to our shareholders sometime within the next 10, 15 years. So that's an approach that we really try to focus on and differentiate ourselves here at Wheaton. It's pure precious metals and a focus on assets that will deliver value in the near term.
Well, great overview, I think, of the precious metals market and the direction from the company. Before I let you go, any final thoughts that you would leave investors with right now? Because it's certainly, I think, a very interesting environment to be in.
Well, and I would have to say that, the amount of appetite, the amount of interest that we've had from generalists, we are seeing a lot of people exploring the gold space. And I really do think that a company like Wheaton, with what we deliver, which is access to the top quality producing mines around the world, high margin assets that have long reputations of producing and delivering, this all feeds into just a great time to be invested into a streaming space. And so I just think that Wheaton should be that foundation investment as you come into the gold space and explore, and then dabble into some of the higher risk, higher leveraged opportunities, but don't make it your core investment. Wheaton needs to be that core investment in everyone's portfolio.
Well, I think perfect place to end for today. So thank you so much for coming on to go over what's happening in gold, silver, platinum, and of course the company.
Yep. Always a pleasure.
Of course. And once again, I'm Charlotte McLeod with investingnews.com, and this is Randy Smallwood with Wheaton Precious Metals.
Thank you for watching. If you like this video, make sure you hit the like button and subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below.